Everything you see here is strictly informational. Forex is a high-risk business. Please do not place trades with more money than what you don't have. Please do not trade other people's money. Do not borrow any money than what you cannot trade with. And please take everything that I say as a personal opinion. I am not considered a financial advisor. I'm not considered a broker. I am just one here simply recording my journey along learning the markets. Alright, welcome everyone to another episode of Bodies and Wicks. In case you don't know what that is, it's a candle. I am Ted, and what I do, if you haven't seen my videos, is I basically just analyze the market. I throw all my thoughts out there, and I see what you guys think. Don't think of me as anybody that has a ton of experience, or I'm not a financial advisor, that's for sure. I just kind of have fun analyzing the market, and I want to see what you guys think too. So I'll be going over Euro USD in this one because, as with most of the other pairs, we're kind of at an interesting spot. And the fact of where it is, it's a timeline in history, breaking trend lines, and the dollar being out where it is. So we could see a turnaround. We could see a lot of different things. So let's just go ahead. Before I get any farther, if you can, go ahead and hit the subscribe button if you like. If you want to hear more from me after you watch this video, maybe you like it, maybe you don't. But we'll see. Alright, so let's just go ahead and head over to the charts here. So first I have the weekly chart. You can see we have a big red trend line that I have going down through here. That goes back all the way to 2008. And down here I know I have a bunch of markings and whatnot, but if we get a little bit closer, we are just on the other side of that, and I'll dig a little bit closer. So here is the daily chart. So here's what we're looking at here. Here are the two different levels if we're going to try to take it long. That we probably need to get across before we see more momentum, moving upwards. And primarily the reason I chose these two levels, one is because it's just above the high that we've currently made it. Two, if you look over here, there is a major resistance area. I wouldn't say major, but it was probably the last resistant area that was hit before now, I guess. It really hasn't retested that line. It's getting close. So I think that's why we're seeing some major resistance right there. Also, as you can see, the red line that's coming through here, that's that major trend line. This has been the third week now that we have. I think last week or 2 weeks ago we went above it, we closed below it. We did the same thing last week, went above it and closed below it. I think this is the first week that we went above it, and we actually closed we went above it. I think we closed below it, or above it this time, I mean. Let me look to see. Oh, and yeah, we did. We closed just above it on Friday. So that was the last candle on Friday here. This green candle here, that was the last candle on Friday. So we did close above the trend line. So what does that mean? A couple different things. Generally, now that we've actually closed above it, you'll probably see more momentum moving to the upside, buying the EURUSD, which also means you're selling the US dollar. However, we're also seeing some interesting things happen with the dollar. So what we're seeing with the dollar right now is, let's see, on a 4-hour chart here, if we want to see the dollar gain some strength, it needs to close above some key areas. These two orange lines being some daily closes that it probably needs to stay above. So if it's well above them on the 4-hour, There's a good chance it could stay above them on the daily. So one is that 93.22, which is exactly where we're at right now. Another is the 93.34. If the dollar ended up closing above that, we're probably actually going to see some weakness in the Euro USD. But if the dollar continues to remain weak, it continues to go down. As you can see, the last couple of weeks, it's kind of gone sideways here. Did make a new low, but ever since it made that new low, it has tried to make a rally. However, it hasn't made a new high. So since it hasn't made a new high, it's gonna be a little bit tricky to see if it's gonna come back, for its own rally, to continue making that higher. So what I have here is some things I've drawn out in the past, especially drawing these. If you know anything about smart money and smart money theory, these are the kind of things that you look at. So we had a double top, right? So double top means that it's probably going to be meant to be broken. You usually don't have. If you have a triple, what that means is that people usually have their here would be a sell limit. You'd have your sell limit just right there, thinking it would go there again. That way you could hit it and go right back down, and you make money. Well, a lot of retail traders think that way. Well, what happened? It went right through that, probably took out a bunch of people, and then also whenever it did that, it made an order block, right? So it made an order block after it had already taken everybody out, and then got the crap out of there. So usually what that means in the smart money terms is that there are institutions, right? Institutions took drove the money up here, took everybody out, and then set up all their shorts, and then went down. So if we see the dollar continue to gain strength and the euro is actually going to lose, I would expect actually the euro to probably push up to some of these levels here that I have marked in blue before they continue to sell off, because these are the areas that the institutions have basically they buy to sell, and they sell to buy. And you've heard me talk about this in other videos if you've listened to me. So first level that you could be looking at is this one here. I think it would probably actually eventually get back up to almost here. So this 19307, halfway through that, somewhere would be around 19373. And if you wanted to be safe to put a stop loss, I would put it just above this red wick here, maybe move it a little bit higher to about the 196, 197 area, somewhere around there. I would expect it to probably push back up all the way back up here, and once it gets in those order block areas, and then shoot back down the other way. And that's if we're to see the dollar to gain strength. If we're to see the dollar gain strength, I would see almost a reversal on this euro. Even though we haven't seen it play up in this area, it kind of, it's been shooting up for quite some time. And, it has been making new highs, of course, but it could have the potential to also just go the opposite way. It all depends on the dollar. Now, if we're going to see the dollar lose strength, then I would expect it to come down to around these areas here. And the reason I kind of chose this area is, and I got down to the nitty gritty, and I got down to like the 1 hour of this, I believe, you'll see a flat top candle, right? You'll see so right here, institutions probably sold, and this was their last sell, right? Before we continue to move forward, who knows, in this little 1 hour candle here, they could have pushed it down and got rid of some of those positions. I highly doubt it though. So what I would expect to see is that this area to come down to this area. You can use even this, maybe I would say maybe just a little bit lower as a stop loss. So the 172 area to around almost a 171, not even 20 pips right there. So that's a good risk to reward if you were to use this as, you know, an area to where it's going to come down to and then continue the opposite direction. Because what they do as soon as they get into those areas, they get rid of their positions. They're, you know, they're still holding those sell positions that they're in, and then continue on to move forward. Now, to be honest, I think this is probably more likely the scenario. I don't really think the dollar is going to have too much more strength going forward. And also, we've been seeing a lot of this, these smart money plays kind of happen along the way. So if we go back through here and we see these, you know, it's moving up, and then you'll see, you know, probably some resistance, but also at that resistance, you'll see those sell candles. And at those sell candles, you know, they'll buy, they'll get up out of there, they engulf almost every candle they've had before that. And so that means they're still holding some buy positions, right? So they got to get back down there. They'll sell. So they'll sell somewhere around here, convincing everybody else to sell. They get rid of those buy positions or sell positions, and then they buy. And then the cycle continues, right? So, and it's been doing that. The only thing is that we still haven't actually made it back down to this area, right? So there is honestly also a good possibility we could see it come back down to here. You know, it could come back down to this area before it buys again. You know, it's a pretty long ways away. So I don't think we're going to see it come all the way back down to here. And that's why I think if we are going to see some kind of, but then again, here you do have all of this right here. This is why I kind of drew out this box, is because there is a lot of money sitting right here. There's a lot of liquidity sitting right under here. So everybody has their buy limits already set here, which could also be a trap. So even though I said this could be a good spot for a buy limit, it really could, and no doubt about that. But that could also go straight through here. And even though you have the 200 MA sitting right here, it could hit these, let go of those positions, and then, you know, I don't know how many times ever it was, you know, sometimes you'll see it just bounce right off the MA. If it has enough strength, it'll go straight through the 200 MA, but then it'll almost be like a slingshot and then take it right back up. So these are definitely the areas that I would be watching, especially this week, you know, to see where the euro is going to go. I would say first, if you're thinking it's going to go long, we'll watch this area here. But then again, this is what scares me, is all this liquidity that's already sitting here underneath it. There's going to be a ton of retail people that's going to have their buy limit set right through here. Institutions know that. They want that money. They're going to take out those people, and then they're probably going to set up shop or somewhere around here to where we see this order block right here. That was also a smart money play that came down and got rid of these positions. So I would be banking on more so this position. You know, if you're going to be looking for a long position, make sure you have all the confirmations in play, you know, before you make a trade. But you know, if we see the dollar lose strength, you know, as you can see, this once we made it up to here, we just shot right back down. So this is another clue that tells me there's some smart money sitting right here that was pushing it up as far as they could. That way they could sell and make more money, because they make more money, you know, on this sell than they would on this sell. And same thing with here, you know, they came up through here, they pushed all the people that had their sell limits here. They took all of them out, set up an order block, and sold. So those are the two different kinds of scenarios I would be looking at as far as this week for the Euro USD. Again, once it breaks above here, though, that was that, and I think, yeah, that was the other resistance area that I had on the daily. That's where that was. So it's sitting just above here, right? And these are some callouts that I had, and I probably just need to delete those if I can get a hold of them. Yeah, don't worry about it. But yeah, if you are looking at EURUSD this week, I personally would not worry about this trend line coming through here, because it has tested it, retested it, has just been jumping through it. It's paying no mind to this trend line that's coming through. It's just kind of sitting on top of it. It's not breaking out of it, because generally, the kind of consensus to retail traders is breaks a trend line, retests the trend line, and moves forward. Well, usually when it does that, it's also actually somewhere around a Fibonacci level, to be honest. So that's one thing that we can check to see if we do have some confirmations on here. We can throw some fibs around to see what we're actually likely to see. And if we want to throw a fib from like one of the top of these here, it's the only thing about having so much stuff on your chart is that sometimes it doesn't work. Let's get rid of this order block right here, right? Let's see if we can't come in a little more, because I want to see what these areas are here, if they're somewhere around 50% or something like that. That could be very indicative of where this might want to go. Just a little bit above 50%. The 618 area is actually another area that I have that it could possibly come down to. One of the reasons that I think it could still possibly come back down to the 618 before actually making a very, very, very long move is because that is also another trend line that has not tested, right? So if you look at all these different trend lines it has tested as it was moving sideways for quite some time. You look at this blue one, it moved through this blue one, it came through, it tested it, right? Then if you go to this high point over here, and you start drawing trend lines from over there to this one, right, to this high point, it actually came above here, and then it hit this other trend line, right? So it hit this white trend line. Well, I guess it wasn't the trend line just yet, but it did break above it, came back down. Well, let me see here. Yeah, it wasn't. Yeah, I guess it could have been the trend line. I guess I didn't really think about that. Let me see here. So if we move this down to here, that's what it's supposed to be. So after it hit there, we made a new trend line. It came back up. It tested it right there. It came back down and retested the yellow trend line, and then decided to move on. And as you can see, if we look closely in here, I don't think we have actually retested yet. It just kind of came up and shot out of this other trend line area here. So we have not come back and retested this area. So if we're gonna, like I said, look at the Fibonacci again, that was probably right around the 618 area. If we're looking at this as a whole wave, this whole entire part is one wave. There's other ways to look at this too. I also like to do, especially once it exits the wave. That is where I like to put the bottom part of my new Fibonacci. So it would probably be, I guess it'd probably be somewhere around here. Draw this up. And then yes, and then this area right here does look a little bit more appealing. It actually hits the 7-1 level, which is actually my favorite fib level, because a lot of people are always thinking the 618. Institutions will generally push it a little bit farther than the 618, but not yet to the 785. People are also anticipating that. They usually go right in the middle. Well, not exactly right in the middle, but it's kind of close enough in the middle. So the 7-1 is also a level I look at, and that's exactly where this is sitting, is right around that 7-1 level. So but then again, all of this has taken last couple of weeks, months to develop. For it to get back down this far, it could still take another couple weeks, months to develop. So that's why I'm looking at these immediate areas, right? These are just the 4-hour charts that I'm looking at right now. So if we're going to be looking at something a little bit more, immediate, something that you want to trade off of, these are the levels I would be looking at, right? So again, this 1.7212 area for a buy. And then if it gets even lower than that, again, not the 618, I wouldn't even count on that one. I would be looking more at the 7-1 level, the 1.6 area. If we're looking to go short, I would wait for it to get past this halfway point. So from this point to this point here, this wave that we just kind of shot down, generally there's always about a 50% retracement, right? And about, I think I moved it a little bit, looks like. So if we were to have a 50% retracement on that, let's get rid of that, it would probably be somewhere around the 1.8242 level. If it crosses that, more than likely you're going to see at least, I'd see if you can pull the trigger around this 1.874 area. I would set a very, very short stop loss, because if it goes farther than that, it's probably going to end up going back to this area. So you don't want to have a huge stop loss. It's going to go all the way back up here. And then if it does, and it gets above this 1.9686 area, you just lost a lot of money, right? So that's why I like having my risk to reward as small as I can be, because I try to see if it's going to go past some, if it's going to go farther than what it's, if you study smart money, farther than what it should, then it's probably going to have a different setup. And you don't want to risk a lot of your money waiting for it to get to that other setup. Instead, get in, get out. You only lose a little bit, and then have the other setup ready, right? If you lose and somehow it doesn't end up going to the middle here, which there's a, it's a possibility, but I don't think it being a high possibility. We could throw a fib on the immediate level here and see what happens. So let's just go ahead and do that, because I do like Fibonacci levels. I do think they're a little bit more indicative of price action, more so than trend lines and whatnot. Because trend lines are meant to be broken. They get broken all the time, and not necessarily a retest is what's going to save it. To be honest, a lot of the times, that's where the retail traders get in trouble. Fibonacci levels are definitely a little bit more, and as you can see, if we draw from the bottom of this, the farthest point down here after we made this new wave to the top point, after that it came back down. And where did it hit? Well, it did hit the 785, but it closed around the 7-1 level. So you can see that this is probably where the institutions were sitting here waiting, to go ahead and pull that trigger for the buy. Because to be honest, 71% is definitely a better discounted price to buy versus a 61%. So that's why, generally always look for less than 50%. If you go to the store and you get something for 50% off, you're looking for a bargain, but you want more of a bargain, but you want a bargain that, people are always going to want it to be 61% off, 61.8% off. But if you can wait out just a little bit longer, right, and get that bargain for 71%, more than likely, those are the institutions are going to be the people that are going to take that. And I think that's what we're looking at here. So be careful of those levels. And this is what I have drawn out. I'll throw this on TradingView if you want to follow me on TradingView. I am at Tesley on TradingView. So that's what I have for EURUSD. If you can, check out my other videos about what's coming up this week. I did one on the S&P. I did one on gold. Be careful with those. I don't think I was too clear on some of my ideas, but I think I got them across as best as I could. I also did one on NZD USD Kiwi dollar, just because that one's also an interesting place, just like the Euro USD. It's same type of situation, you know, it just broke a major trend line. You know, we could see it going long, but you know, again, this is all going to depend on the dollar. And I drew up some areas for you guys to look at on that one as well. Next one should probably be, I think I'm going to do one on cable, GBP USD. Maybe look at the NASDAQ. NASDAQ's a little bit more difficult to do just because we're at all-time highs, and it's just continuing to grow. And the best thing to do for NASDAQ is, you know, find a good spot to enter to go long and go long. I think it's as simple as that for that one. I mean, we probably will see a pullback, and I would say wait for that pullback. But anyways, I'm getting ahead of myself, and I'll probably make a video on that so I can talk about that. But anyways, again, if you can, go ahead and hit that subscribe button if you want. You know, let me know that you like this channel. Share it if you want to your friends. If you want to share ideas and talk about you know, what you think, you know, hit me up on Telegram. I'm also at Tedsley on Telegram. I'm at Tedsley on can't think of it. Hello, TradingView. That's TEDZILY. That's because my name is Ted, and they just kind of threw that out there as a name, and it stuck. So anyways, that's my video for you guys here on Euro USD. Let me know what you think in the comments, and I will see you in the next video. Alright, thanks a lot for watching, and I'll see you guys.